It was 2 weeks ago the UK voted to leave the European Union. And what does that mean for us here in the U.S. and the financial markets? Well, our financial advisor, Elaine Beadle, is here to talk more about the implications. And after that Brexit vote, the financial markets responded negatively. And Elaine, we've all been watching the markets go up and down. Where do we stand now?
Right. Well, you're correct in that the morning before the vote, we were at 18,011. By the end of the day, we had lost 600 points in the Dow, so we were down at like 17,500. So we had already came back. That was just a volatility that happened. But by the end of July 1st, last Friday, we were almost totally back up to where we were. Now, we lost a little bit yesterday, but the market's up today. So I think we're within 100 points of where we were before the vote. So I think people need to understand, maybe before they make any actions, what this is all about. I mean, the European Union, or an agreement among these 28 nations, has been in place for quite some time. 1992 for the European Union, but even post-World War II, so 50 years ago, we had some kind of agreement among them. But basically what it is an agreement for movement, free movement of people, goods and services, and capital across all of their borders. So that's what it's really all about.
Now, what were the main reasons why the UK wanted to leave the European Union?
Actually comes down to a word. Most of them reported their vote because of immigration, because of having that free open border where people can move back and forth, just like we can move between state lines, they could move between country lines. And the concerns that came up for jobs going to others than their local citizens, for the refugee influx that they had, as well as just terrorism and terrorism influence that it might come in.
So what does leaving mean?
Well, what it means is that all of these agreements that they had between all the nations have to be redone, now perhaps even individually. So they have to go back and work on those agreements, get approval from all those countries. It's going to take a while. This is not a freight train running down the track. They say it's going to take at least 2 years to get these things in place. So it's not like we're going to see a lot of movement right now. It's more like a sailboat needing to navigate as it moves across the channel.
Okay, in the meantime, we have to watch the financial, the economic implications. What can we expect now in the months ahead?
Well, the smoother this transition, the easier they get those kind of documents into place for their free trade, the more likely that this is going to have less negative impact for everyone. But, you never know. Nothing's guaranteed. If someone just out of spite is really not wanting to give them those same things, it could hurt them. But this needs to be a win-win for everybody. So there's no reason for them not to want these trade agreements to go into place. And so if they do, I think in the long run we'll be fine. And so for an investor, you need to take that long look. You need to understand that you need to keep calm and carry on,
yes,
as the British would say,
saying, yes.
and look at what your portfolio needs. And when we have this volatility, because the market doesn't like surprises, doesn't like uncertainty, take it as an opportunity to buy or reposition in your portfolio versus to panic, and then I think you'll be fine.